Hi, I'm Seth Freudberg. I'm the Director of Options Trading here at SMBU in Manhattan. I'm also the head trader of SMB's Options Trading Desk. So today I would like to talk about trading first thing in the morning, trading options first thing in the morning. And what I'd like to suggest to you is that you don't trade options first thing in the morning. There are reasons behind this, and I want to show you an example today to kind of drive the point home. Trading options first thing in the morning to your advantage, and there are cases where it is to your advantage. You're getting a terrific price on something. You buy. You've had a position on, and it's appreciated greatly overnight, and you think you can get an abnormally good price for it. Sure, go ahead and trade very early in the morning, right after the market opens. On occasion, it becomes advantageous for you. But if you are more in a protective, adjusting mode on a trade where you're at the beginnings and you're not really looking to cash in on the trade, you're looking to control the risk of the trade, trading first thing in the morning is a really bad idea most of the time. And let me talk to you about why. First thing in the morning, everyone in the world's looking at the U.S. S&P futures and other futures, relevant futures markets, and this is going to affect the options positions that are open relative to wherever the market is. And so, first thing in the morning, there are people who are in, for some reason, for various and sundry reasons, will be in a kind of a panic mode. And they will be, if the market is, say, moving in a very hard in one particular direction or another, and they will be making frequently, especially amateurs, very panicky moves first thing in the morning. So as a result, there is a tremendous amount of pressure on the pricing of those options. And for example, if you're short a put option and the market is selling off reasonably hard before the open, the futures are selling off before the open, you are going to pay very dearly for put options at 9:30 and 5 seconds or 9:30 and 30 seconds in the morning. I'm talking Eastern time here. So therefore, if you are trying to buy the put at that hour, whatever put you're trying to buy, you are probably going to pay through the nose for that option. And it is much better in almost all cases to be a little patient and wait and see if the pricing improves, which it typically will for two reasons. The first thing is that the market will frequently reverse itself. And so if you have a market reversal, then the pressure on that particular option will go way down. And as a result of that, if you still feel the need to buy back a short position of some sort, if there's a reversal, A, you may not need to make that adjustment. B, if you do make that adjustment, there is going to be a significantly better price. But what's interesting is, even if the market does not back off, waiting is still generally the better thing to do. And let me show you a great example of that. Yesterday was April 5th, and it was 9:30 a.m. in the morning. And at that time, if you looked at the May 20th expiration of the Russell 2000 Index 1090 put for the May 20th expiration, you will find that that was trading at exactly $25. The Russell 2000 Index opened at 1,150 cents, exactly 1,150 cents. Now, if you had waited 30 minutes, the Russell reversed slightly. It was now trading at $1,102.20, 1102.20. And that same option dropped from $25 to $23.50, even though the Russell index was still down, but it was just down less. Now it was trading $11.20. So you would expect the price of that put option to go down if the market reversed. So lesson one is wait a little bit. Let's see what happens in the market. You don't want to necessarily react to the very first thing that is happening. A lot of traders get trapped in that first 30 minutes or 60 minutes of the market by doing so. But here's what's interesting. If you were to now fast forward to 12:30 p.m. Eastern Time, the Russell 2000 index was now trading at 20 cents below its original opening price. So it was 1,150 cents upon its opening. It now traded down to 1,130 cents. Not a big deal, but still lower than the open. Nonetheless, that same option was trading not for $25, not for higher than $25, which is what one would expect. It was trading for $24.80. Now, why? Because at that hour, there was not the tremendous opening drive market pressure on those put options. At that hour, the market had sort of settled into a range, and as a result, the buying pressure had come off of those put options. So the price, even though it theoretically should have gotten a bit worse, got a bit better. And that is a great example of why you should wait. I've seen many examples of this over my trading career, where you at the exact same price, an hour after the market is opened, at the exact same price, you get a significantly reduced price for your option. So what's the moral of the story? Don't trade options before 10 a.m. if you can help it. And I'm not saying that there are no reasons at all that you would trade before 10 a.m. There are certainly, if the market is favorable to your position and you want to close it, yes, of course, you can do that. If the market, if other things are going on, say from a margin perspective in your account, correcting an error, an execution error, there are certain reasons you may want to trade early. But getting a better price on an option is usually not one of them. And again, you very frequently see a reversal in the market upon an open, and so panicking in to the first price is almost always a bad idea. So you win if the market reverses, and even if the market doesn't reverse, as in the example that I just showed you, you still will usually win. So there's not a lot of logic behind trading first thing in the morning to protect your positions. Wait a little bit, wait for the selling pressure or the buying pressure to come off those options, and then you can, at that point, go in and get at least a reasonable price for that option. So just a little tip for the week. Think about that. Sit on your hands maybe for the first 30 minutes of the market. Go out and get a donut or something, but try not to trade to protect your position at that time if it is at all possible. Thanks a lot, and we'll see you next week.